Obviously, we are with CryptoMondays London. So for those of you who don't know, CryptoMondays London was founded in 2018 with the sole purpose of onboarding and educating anyone who's interested in the Web3 industry. So ever since then, we've been hosting monthly events with an educational portion, such as what you're about to get, bookended either side by networking opportunities. Obviously, we could not do what we do without our sponsors. We are a nonprofit. So big thank you to our sponsors up here. We've got TechSpace. TechSpace is our venue sponsor, this beautiful place. TechSpace.
Round of applause, TechSpace. So, we love you.
So they have eight venues all around London, including their newest one in Farringdon. They are a co-working space. So if anyone is interested in a co-working space or an event, hosting an event, go and talk to these two over here, Tess and Adam. Hi guys. Very nice. Also a big thank you to Economy, to Kudos, to Vault 12. We've got Wasim in the house. Where's Wasim? Give us a wave. He's in the back there. Hi Wasim. The Digital Commonwealth, the Jade City, and Simoto. We've also got Marco in the house. Where's Marco? Give us a little wave. Hi, Marco. Okay.
No, awesome. So today, once this event finishes at 9:30, everyone is welcome to join us at the Fox spot, which is just around the corner if you Google it, if you want to carry on having drinks after. Christmas vibes.
Nice.
We have mulled wine over there, so when we finish talking stuff, you can grab some mulled wine. And then we have a bunch of cupcakes, I believe, that Wasim and Bob 12 have provided for us. So thank you so much.
Yeah, we'll have those at the end. Also, can I just get a big round of applause for all the Crypto Mondays crew, because they're all volunteers. They're so amazing. We've got two things. We've got Julie, we've got Larry, we've got Zara, she's somewhere. Rohit's not here. We've got Rue.
Caitlin.
We've got me.
Harry.
Yes.
Marcus
and
hey,
Nash just walked in. Hi guys. Ade. Yeah, thanks guys. We couldn't do it without all of you. So yes, thank you so much. So without further ado,
So first up, we have a keynote. And thanks so much, Onchain, for being our principal sponsor for the event. So I think Michał Moneta is going to start. Do we have Michael in the room? Amazing. Is it Michał or is it Michael?
Michał.
Michał. Oh, I'm so sorry. There we go, Michał. Sorry.
And Michał can tell us a bit about Onchain as well, please. So come on up.
Okay. Round of applause. Yes, this is USB-C. Oh, come on. Try it? Oh, no, wait. Please, press the key immediately. Oh, come on. The first shift key. Yeah. Right. Yes. Yeah. Amazing. There you go.
All right, so hello everyone. Yeah, I'm Michał. That was perfect. I'm usually it's Michał. It's depending where I am. I'm in England. Actually, I've been there for the last 4 days. It's been Michael, but it's nice as well. It's nice and staying with Michał, but yeah, it's still very good. And yeah, today I wanted to talk a bit about stablecoins and with this provocative title that it's basically the best and maybe the only use case of blockchain to date. And why we are talking about use cases specifically is that basically Onchain as a brand, Onchain is a foundation, Onchain is an entity. It's all about real-world use cases of blockchain in general. We are a research platform, I would say. We are a Web3 research platform, and we wanted to do something different than research platforms that are out there. I'm pretty sure that you interacted with Web3 research before. And usually it's all about the investments, all about crypto stuff. Usually it's also all about the future, if it's not talking about the investments. Most, I would say often it's combined, but you will get very, very rich because of the crypto investments that you make. we decided to go in a little bit different direction. So first, we decided to stop talking about crypto and investments and go beyond Web3 in terms of the research that we provide. So basically, we look at the world and try to find the best use cases where blockchain can help the world beyond the Web3 niche. And it sounds very idealistic, but basically stablecoins, and I will try to prove it in a minute. It's one of the use cases that we found as basically the real world one, the one that actually goes beyond the investments themselves. So we are a Web3 research platform focused on the real world use cases of blockchain, and basically stablecoins is one of the best use cases that we found. However, as we are researchers by heart, I wanted to start basically with a research question to all of you, and maybe you will be able to answer this one. As for the blockchain and crypto and using it in your daily life, what is it basically? How do you interact with blockchain, or how do you use cryptocurrencies? Is there anything specific? And we are in the Crypto Mondays, so I think that quite a few of you actually interacted with blockchain before. How do you do that before? Salaries, there here. Yeah, okay, that's nice. What else?
Yeah, right.
Yeah, that's the most obvious one. Yeah.
Staking.
Staking, okay. So DeFi stuff in general as well, but for staking specifically, okay. Anything else?
Dollar fasting.
Okay, so value as well. Yeah, I would say it's one of the most popular ones. And basically, we mapped quite a few in general. When looking at this list, for example, trading and investments, one of the most popular ones. Inflation hedge, also, I will try to tell a bit about it, but when it comes to the countries where the inflation is very, very high, that's where also the crypto adoption is the highest. So definitely it's one of the most popular use cases. Cross-border remittances and institutional money transfers, also pretty obvious use case of blockchain and crypto. The rest, enhancement of transparency, especially for companies, whenever there is business integration of blockchain, which we all very often celebrate because it's so rare. Actually, also, it's something that actually helps the companies very, very much. Store of value, you mentioned it literally. Also, exposure to non-local currencies, that's also something that blockchain and cryptocurrencies offer. And besides that, we have paying for goods and services. It's not the most, I would say, popular use case of blockchain in general, and also when it comes to the use case, I will tell you about specifically. But to be honest, I wouldn't say the complete list of use cases of blockchain and crypto in general. However, I would say that the majority is there, and the funny thing is that basically most of the things can be also applied to stablecoins specifically. That's stablecoins as a use case is basically the use case that encapsulates quite a lot of utilities of blockchain and crypto in general. And just to be on the same page, stablecoins, so basically the cryptocurrency that is backed to other currencies so that we can use a cryptocurrency alternative to US dollar instead of US dollar, so that we are on the same page. For example, my partner is there and maybe she's not, I would say, fully aware of this thing, but funny thing about her is that she invested in Bitcoin when it was at 22K, and she cashed out after making Forex, so she's a better trader than 80% of us that are there. But coming back to the topic of stablecoins, basically, these are the stats that we mapped for the upcoming research report that we will publish, because it will be all about stablecoins, and that's one of the reasons I'm talking about this topic today. As you can see, we did quite a lot, I mean, as an industry or as issuers of stablecoins or basically as Web3 space in general, in terms of bringing the supply and the adoption to the stablecoins world. And to give you a bit of a context, especially when it comes to the numbers from above, as for the total transaction volume, for example, if we compare these things to Visa, to MasterCard, to PayPal, as you can see, as for the transactions, I would say the period that we analyze is pretty much the same when it comes to the length. It's just when it comes to the stablecoins, we took the last 12 months. When it comes to the rest, we only have available data from 2023. The annual transactions, I mean, when it comes to the volume, is higher when it comes to the stablecoin than in the case of Visa and MasterCard. If are very close to being combined, to be honest, it will also be more. As for the entire transaction volume, we are currently in 2024 at the level of surpassing Visa and MasterCard in terms of this particular use case. Sounds very, very huge, sounds like something that's fine on the Web3 space did for the world. Obviously, it's not, I would say, so fruitful and so great. If we take, I would say, one very specific metric, which is the number of transactions specifically, obviously it's a little bit different because the total active users, for example, when it comes to the stablecoins combined compared to Visa and MasterCard, yeah, there's no difference. Obviously, there are more users of usual cards when it comes to Visa and MasterCard than users of stablecoins. But as for the transaction volume, it's currently higher than in the case of Visa and MasterCard when it comes to the last 12 months. Obviously, it's mostly due to the utility, because when it comes to Visa and MasterCard, we pay with MasterCards actually for bags of fruits and vegetables, and when it comes to stablecoins, we pay for bags of Fartcoin or any other this kind of things, and basically the intention is obviously completely different. However, the use case is there, and basically when it comes to the transaction volume, it looks very, very good. Where does this growth come from, and basically how it's happened? Because if we circle back basically a little bit to this slide, where we have the entire chart with the supply, if we go to 2020, it was not that long ago, basically, if you remember containing masks. It was not that long ago. It was a completely different world, and right now we are at the level of Visa and MasterCard or even going above them. So where does this, I would say, very rapid growth come from? Basically, the first thing is traders and yield-hungry individuals, and that's one of the things that we also discussed already. But more importantly, even when it comes to the drivers of adoption, is the company startups and enterprises. I make some kind of distinction, but generally businesses, let's call it, and emerging markets specifically. And I wanted to go over these three areas, basically, how it happens. The first one, the first category when it comes to these routes of adoption, is likely the most, I would say, obvious ones. Even we did the research on developing economies and advanced economies in terms of crypto users, and we asked them basically how they use stablecoins in general. And it's not a surprise, basically, that no matter if it's an advanced economy or it's an emerging economy, actually trading or investing, so the line from the very bottom, is the most popular use case of stablecoins in general. So no matter how much I will convince you today that it's a real world use case of blockchain, actually the majority of the transaction volume, the majority of transactions in general, they are all oriented around trading or investing. However, storing value, we may say it's something that goes beyond Web3 as well, because it may affect our personal finances. That doesn't have to be actually denominated in crypto specifically. So as you can see, obviously it's the majority, and when it comes to driving the adoption by individuals, yeah, it comes from trading and investing. However, if we go to the second category of companies, startups, and enterprises, actually it gets a little bit more interesting, and also the potential is a little bit bigger. For example, JP Morgan, they already have their own stablecoin, JPM coin. Not, I would say, the most fruitful name they could come up with, but it's just for institutional purposes, and it helps them actually to settle the transaction with their clients a little bit quicker, or way quicker actually, and way cheaper than using traditional services. Another example is BBVA combined with Visa, because basically BBVA uses Visa tokenization as a platform to launch their own stablecoins again for example, specific clients to work with. So these companies, they are launching their individual stablecoins, but obviously they are not traded on centralized exchanges or whatever. However, they use the stablecoins instead of usual money transfers to settle down transactions again quicker or a little bit cheaper than in other cases. Revolut is also planning to launch their own stablecoin. Obviously, Revolut has quite a big market in terms of crypto contracts and offering crypto inside the app, so that's likely why they need it. PayPal, we may say as well, however, the case is a little bit different, and they already have a stablecoin, but actually it has been with us for over 1 year, I would say, as we look into this timeline. On the left-hand side, you have the market capitalization in millions, and basically right now it's over 1 billion when it comes to their own stablecoin, and it's a stablecoin that's actually open. It's a stablecoin that you can use not only inside PayPal to actually do something there, but you can also trade using the stablecoin the way you do with USDC and USDT, and their growth was quite rapid. At the same time, it was growth a little bit amplified by various airdrop campaigns and the fact that they launched on Solana, and a lot of people speculated on that as well. However, still, the growth is substantial, and if we look at these reports, in terms of their current market cap, year-over-year growth, yeah, it looks quite impressive considering that we are talking about something that is the crypto equivalent of $1. It's not something that you can speculate on and make a lot of money on. It's just for other, I would say, purposes rather than strictly investments and trading. However, speaking of the current state of the market, I already saw a tweet to one of the influencers where a person actually asked this influencer whether Tether can make $10 this cycle and basically how they see that. So it's not so obvious for many people actually in terms of the actual price of these assets. So basically when it comes to the PayPal, they are growing rapidly in terms of the stablecoins. The question is, why do they need this? Obviously, one of the reasons is to work with their clients the same way as, for example, JP Morgan, they can install the stablecoins in their apps. And basically, when we looked at this slide, where you have Zoom, which is a platform for remittances, actually using stablecoins for this specific purpose inside this app, and is, as I mentioned, connected with PayPal, actually enables them to lower the cost of these remittances by 25%, so quite significant considering this particular use case. But the main reason why PayPal is actually trying to grow their own stablecoin, and it also applies to Circle and Tether as issuers of bigger stablecoins, is to make money out of it. Because basically all these companies are extremely profitable because of the stablecoin business. And they earn in 4 ways usually. Interest income is, I think, the biggest thing. Obviously, to launch their stablecoins, they need to have quite a lot of assets in their bank because it needs to be possible to redeem the stablecoin. So they need to have this money in the bank. And obviously, when it comes to the money that they have as their treasury, they can earn interest on that. And when it comes to the Tether, specifically, I will show you a few stats in a minute, it's significant when it comes to the profit that they can generate. Besides that, obviously, transaction fees, and the more transactions and the higher transaction volume, the higher income will be. Minting fees, for example, when it comes to the Tether, if you want to mint Tether, actually you need to pay a very small but still significant in the outcome fee to Tether. And basically what they can also do, all these services, but PayPal specifically, they can also earn on foreign exchange fees. So you can basically treat the stablecoins as the source of the exchange rates when it comes to foreign currencies inside their app. And again, earn, for example, on arbitrage. So quite a lot of nice revenue streams. They are so nice that I'm not sure if you saw this message somewhere because it was quite loud that basically Tether is right now making higher profits than BlackRock. And obviously this news was all around the world, to be honest, and Web3 folks, they were actually very excited about this one. It's not, I would say, that much. It very much depends because Tether, when it comes to their profits, they include, for example, the growth of their Bitcoin assets, their gold that is there. So it's not about the operating profit specifically. They also include in their statements the yield they earn, for example, on Bitcoin that is increasing their price. So it's not, I would say, so black and white, but still they are very close to BlackRock in terms of generating profits. And as you can see in a few slides, I will show you actually how few people they need actually to generate it. But if we look at their financial statements, actually they are pretty consequent in terms of the profit that they are generating. It's quite substantial every quarter, and it's very stable in terms of profit being generated. They are not going below this one, and it's all thanks to this massive treasury that they have to basically offer the stablecoin that they have at the moment. And they are able to do that only by having, I would say, obviously it's just a stat, but they are reporting that they have between 100 to 200 employees. So if we calculate the revenue per employee, it's $62 million per employee in terms of the generated revenue. So the operational efficiency of this business, even if it's not 100 employees, but 200 or 500, actually it's quite a lot. It's even higher than OnlyFans, which always was served as the best benchmark in terms of generating profit out of the very small group of people that they have around. And if you compare it to more traditional companies from NASDAQ, like Netflix, Apple, Google, Microsoft, there is no comparison, like $62 million of revenue per employee compared to $1 million for Microsoft. What is it compared to Tether? Basically, it's quite a lot in terms of how much money they are generating. Can I also mention the energy market when it comes to the stablecoins? That it's one of the best sources of the current adoption, and likely the one with the highest potential for the future. That's why I mentioned in the beginning as the highest one. It's not our survey this time. It's a survey by Custom Ventures. They launched a very nice report on stablecoins. in emerging markets specifically. And here they check basically, it was the direct answer to the question, which how, when it comes to these use cases, were there any, I would say, occasions in your life where you used stablecoins for that? So whether people from Brazil, Nigeria, or Turkey use stablecoins at least once in their life to trade crypto, and NFTs save money in dollars, obtain better currency conversion rates, and so on and so forth. And as you can see, we are not talking here about 10%, 15%. It's usual when it comes to cryptocurrencies in general. When it comes to the emerging markets, specifically these ones, I would say, and stablecoins as this one digital assets to pick, basically the numbers are quite impressive, even when it comes to buying or selling goods and services. If we took Nigeria, like half of the people that are interviewed basically use stablecoins to trade, to buy or sell goods and services, not to trade, but to buy. Actually, it's quite a lot. But when it comes to the most popular use cases, saving money in dollars, for example, or converting their local currency to dollars, these kind of use cases are popular no matter the emerging market basically that was analyzed there. And I wanted to also mention this dollar thing and the remittances because it's very much connected. Because someone can say that basically we don't need stablecoins to, for example, get money from people from outside my country. I can be a person in Nigeria and basically receive money from other people using Wise or Western Union. And likely the user experience of this kind of service would be astonishingly better than in the case of stablecoins. However, if we look at the settlement time, for example, and transaction fees, usually it's the stablecoins that win this kind of race compared to Wise or Western Union. That's why, for example, people from Nigeria or Indonesia decide to receive their money from outside of their country in stablecoins compared to traditional services that are there. And it's specifically important for the US dollar because as you saw also when it comes to the slides in terms of emerging markets and the reason why people are actually using stablecoins there, but they want to get exposure to US dollar specifically for people from Nigeria, from Africa in general, but also from other emerging markets. I mentioned also Indonesia or Brazil. Actually having the exposure to dollar makes their lives and their financial assets way safer. And we can talk a lot in terms of the disadvantages of dollar and how broken this currency sometimes is. But for these people, actually, it's no comparison to the usual currencies. And I mentioned this correlation between the inflation and so actually it's presented. I mentioned the 1 minute, maybe two. I mentioned the correlation between the inflation and the adoption of cryptocurrencies and stablecoins specifically. If we take countries from the top 20 chain analysis index of cryptocurrencies, so they measure basically where the cryptocurrencies are well adopted, if the 15th place, 12, 8, 6, 2nd, and 5th, actually that's in the countries where the inflation is super high, the cryptocurrencies and specifically stablecoins are adopted way more often than in the case of other countries. Mostly because of the fact that they give them the stability that they can break away from their local currency and basically stick to this US dollar with all its disadvantages, but definitely as a more stable currency than their usual local one. And this market, when it comes to stablecoins, is very much biased towards US dollar. If we take euro even and stablecoins based on euro, no comparison when it comes to market capitalization, the rest actually doesn't matter. And I don't want to extend the speech even more, so if you would like to read more about this part, maybe you can scan the QR codes. There is a thread written by me, so you can think that is at least connected to this topic, and you can read it in detail if you want on my profile. I hope it will be working with this thing. If not, I will tell you exactly what the tagline is. And just two more slides because I'm maybe free. I can feel the pressure coming from all of you. I basically wanted to finalize because we try to be objective here. It's not like fresh and fruits and vegetables and everything is nice about the stablecoins. There are challenges. CBDCs. Why do we need stablecoins if we have CBDCs basically? Actually, people are not so willing to adopt CBDCs and use them. I mean, they actually, of course, it's the usual local currency around blockchain. However, there is no decentralization there. The transparency is there, but to be honest, for completely different reasons in the case of stablecoins. So people are not super willing to adopt CBDCs. That's why this topic, I'm not sure if you also find it a little bit more silent recently. It's not as vocal as 2 years ago. The second challenge with the user experience, of course, is the challenge, but there are solutions coming that will address it. For example, to promote Onchain Foundation in general. there is an app that we are launching in terms of Fast App, which will actually remove a lot of problems, a lot of friction related to using crypto in general when it comes to crypto wallets. No seed phrases, no network fees in a specific token. They can be more variable. So there are solutions that can address it. So if you want to check, Fast App will be launched quite frequently. And when it comes to the regulatory uncertainty, of course, it's an issue. However, I'm not sure if you agree, we are moving in a slightly better direction with some changes in one of the important countries with MiCA implemented in Europe. It's getting a little bit better. And if it's getting better now, and it was so bad before, look how much we achieved actually despite this regulatory uncertainty that was there. I mean, this growth from 2020 up to 2024 in terms of stablecoin markets, I mean, it's huge, and it's really something that the Web3 industry can be pretty proud of, even though it remains as a challenge and it won't be solved so quickly. So the last slide then, as I promised. The slide with the timeline because it's important. If you would like to read more about this particular topic, on the 12th of December, we will publish a very big, even longer than this presentation report on stablecoins. So feel free to check it out. It will be at onchain.org. After the keynote, which will be only 15 seconds, please follow us at Onchain on Twitter. You can follow me as well. I try to write about stablecoin specifically quite a lot, but generally about the use cases of blockchain. So feel free to follow us. And if you post something about this event specifically, you will be able to redeem a merch item from Erin, who is there. He's there. He has a lot of nice t-shirts and hoodies. And he will offer to you once you show that you followed these two accounts and posted something interesting about the CryptoMondays event. And for now, and for today, thank you for your attention, and yeah, have a good rest of the evening.
Thank you, Michał. That was great.
Oh, awesome. So we wanted to ask a general question from everyone. Who hasn't been to a Crypto Mondays event before? Put your hand up if you haven't been to a Crypto Mondays event. Okay, that's really good. Well, welcome. Who is new to Web3? So you got into Web3 in the last 6 months? Come on, that's probably amazing, amazing. Okay, I'm sure there's a
Welcome to the dark side.
It's really good here. No. So 2024 has been, and the last few years have been absolutely crazy for crypto and for everyone involved. There's a lot of very tired people in the room, I can imagine. This panel, Stables, Trends and Chill, because it's the event name. This wonderful panel that we have lined up should be really nice. And you can see that a lot of people have been to Crypto Mondays before, so for all you panelists out there, try and be nice and really informative and yeah, we really look forward to it.
Let's get Ashton on the stage. Ashton is our moderator today. Ashton, say hello.
Thank you. All right. Appreciate Michał for the in-depth presentation. I promised you the report was much longer, so the fact that he was able to fit it in less than 25, 30 minutes was amazing. But yeah, super excited to be here today. I do want to invite my panelists up. We're going to be talking about Web3 in 2025, but also looking back on what happened this year in 2024, and kind of some of the trends as to what's coming, what to expect, but also, yeah, just a bit about all the use cases. Rita, if you want to sit, actually, on that one. Well, no, it's fine. It's fine. We didn't change the order, but that's okay. Sorry about that. I thought we would, but no worries. So yeah, thank you so much. Let's give it up for our panelists. All right. Well, obviously it's been a crazy year, fun year, very interesting year. In terms of what happened in the crypto space. I would love for you all to just kind of give a bit of an introduction as to what you feel was a significant development or kind of encapsulates what happened this year, and yeah, how you're feeling about it these days. Go ahead and start listening if you want.
Hi everyone, my name is Wasim Ahmad. I'm with Vault 12. We do crypto inheritance, so inheritance for cryptocurrency, NFTs, all those kinds of things. Something you have to think about now, not later. So for us as a startup, wanting to see a lot more investors out there that are holding onto assets. I think the biggest thing this year was ETPs, ETFs, exchange traded products. I'm based in New York. I spent half my time in London, half my time in the US. Huge tsunami, that's the only way I can describe it, of like 15 different vendors finally, after years and years of lobbying, coming to the table to sell these products that basically enabled more ordinary, everyday people that weren't in the crypto industry to feel comfortable in getting some type of exposure. And so that definitely buoyed the market. It started the conversations about, is it okay to invest in cryptocurrencies? And so, in addition to the ETPs going up, we started to see the same thing happening with cryptocurrencies. And then later in the year, we saw, even another move with Ethereum. So that's what it was for us.
Great. Hi everybody, I'm Les. I'm a co-founder of a venture fund called Generative Ventures. We invest in crypto-native AI and DePIN projects. Previously, I was the chief economist and chief marketing officer of Consensus, the company behind MetaMask and one of the Ethereum developers. Just want to get a vibe for the room. How many people here have at one point bought Bitcoin? How many of you have not? Are you thinking about it? Are you regretting every single day in the last 30 days of your life? Thinking about it, specifically how much money you didn't make. And anybody here who bought Bitcoin, sold it, and regrets selling it as well?
I think it lasted 20 days.
I regret everything. It's very beginning, all of it. It's an impossible question that you asked. I think the most important thing really that happened this year is that the sort of hangover from FTX and all of the regulatory issues and all of the collapses that really plagued the industry have been, I think, washed out. And that has allowed profound stupidity to come back to our space in lots of different places. I'm not being mean, it's just true. So we have the barbell again, we have the Solana meme coins. In Asia, we have absolute intense speculation as well, of a different kind, on different types of chains. And then in between all of that, we now have real organic growth coming into fruition. Lots of people persevered through the cycle, which is amazing. And I think the kind of the largest lever has been the United States. And the change in temperature is kind of the nice way to put it. Or maybe the voluntary resignation of Gary Gensler. Maybe. Thank you. I'll take that.
So hi everyone, I'm Rita Martins. I currently work at London Stock Exchange Group, but I have also prior to this wrote a book on this space called Web3 Financial Services. I came to this panel with a slightly different angle, so I look into the corporate side of blockchain, let's say the a bit more boring side of blockchain, so how do we use infrastructure within financial services. And within this space, we did see a change, I think it was from April onwards, where suddenly the sentiment was much more engaged, people were much more happy. I remember going to a conference in April and it wasn't just full of people, but everyone was really excited. You can really see the momentum changing from the FTX and all the collapses. From the corporate side, I know we're going to talk about the use cases later, but it was very much a continuation of some of the use cases that we have seen previously, and the continuation of how do we use this infrastructure within financial services. Some of the regulation changes or clarity that we have seen, and also helped some of the companies being a bit more public around some of the use cases that we are building.
Hi, Robbie. So I oversee the investments for local brands, and we both make games and consumer products, but we're also one of the most active investors in the Web3 space. I think when I look at this year, it's interesting because obviously time moves much faster in crypto. So it's hard to believe that a year ago, I think the biggest debate was whether we felt like it was time that we could launch a token again, because everybody stopped launching tokens for quite some time. And it only took 6 months for the debate to move to what's the best way to launch a token, because all the way we've done it for the last 6 months is shitty, and it's terrible, and it's bad for communities, and et cetera, et cetera. So we moved from just, are we alive, to what's the best way and how do we want to live, to now we're just living the party, apparently. So I think, obviously, sentiment is really important. And the other thing that's underlined by all of this is that everybody who's been around building for the last 2 years, 3 years, 5 years, 10 years, has persistently stayed true to their vision of where this space is headed and built all those products. So, it's a little bit less sexy perhaps today to play Axie Infinity than it was 3 years ago. But millions of people are still playing it, right? And not necessarily all the same people who were playing 3 years ago, because it's a durable product that's proved product market fit with its audience, just like stablecoins, just like lots of other things. And so I think the big win for this year is not just survival, but it's resilience, because we see all of these incredible products continue to tick over, and we're just making them better.
Yeah, love it. Well, thanks for the intros. Thanks for setting the scene, I would say. Definitely interesting to see how things have shifted. Yeah, just 12 months, as you said. I want to kind of start off diving a little bit deeper into, I would say, the financial services and crypto integration into the traditional systems, and how you've seen that kind of play out, this past year, but also, in the past few years, and where you kind of see that going. Maybe we can start with Lex on that one.
Sounds good. Oh, this is a more powerful microphone. I can't say mean things under my breath because everybody will hear them. So crypto is financial infrastructure, and it's kind of embarrassing and it's lame these days to say future of finance and future of France and democratize this and delegate that. But it's true. It's a much better financial infrastructure, and over time it's going to be the primary financial infrastructure in the way that people don't really write horses anymore unless they're the police or in a show. And this is how we will feel about banks. Between the years of 2018 and 2022, there was a lot of effort of trying to work with the financial services industry, pushing the idea of these enterprise blockchains or security tokens, or these days the security tokens are called RWAs and so on. At Consensus, we had 200 some people developing the software, another 150 architect solutions deploying the software, giving proof of concept with every single bank you can imagine. And there was a kind of profound mistake, I think, in that business strategy. And that is that the first entry point was to say, how can we, as the blockchain industry, save you costs? How can we make you, the bank, better? How can we transform your capital markets infrastructure in the case of stablecoins? How can we make better payment rails and so on? And none of them really want the thing but 20% cheaper or 20% faster or a little bit better. And so the idea of trying to sell cost saving is what I think held back our industry for a long time. The real kind of switch, the flip that's happened this year is, instead of selling cost savings, we're now selling them revenue. So taking Bitcoin and putting it into an ETF is super delicious to BlackRock, because it is free money forever and ever. And the bigger they make it, the more money they make. And so that is true for all the financial firms. It is much easier to go and sell growth, new business, new revenue, rather than trying to replace the old. And if you'll forgive me, it's the same as during internet age, you want to build Google, you don't want to scan all the books. Or you want to build Amazon, you don't want to, really spend all that time trying to digitize Walmart. And so I think we're now at a place where the on-chain economy is becoming far more real. Bitcoin is incontrovertible as a store of wealth. Computational blockchains are doing things that computer farms just can't do. And now we have the AI wave and the IoT wave, machine devices, starting to create economies on chain. So we're kind of bleeding out into the real world. And I think that gives financial firms a completely different incentive, an incentive to make money. And it goes from us, the crypto industry, having to push to pulling all of this because that's where the demand is. And so for me, that's really exciting. I think it is a switch in a power dynamic. And it's, there's also a lot more dignity in being able to behave this way.
Yeah, it makes a lot of sense. I'll just pass over in a minute. But yeah, I mean, just on what Michał presented before, how Tether makes 62 million per employee is insane. And you see these digital companies just implement this infrastructure and this technology and then just make so much money from it, right? It's hard to compete with that. It's hard to refute that situation. So yeah, definitely agree. I don't know if Robbie or Rita want to add on to that.
Sure. So I do agree with some things they said. I have a slightly different perspective on
I hope you disagree entirely.
So, because it's interesting, I mean, the cost benefit is something that people still talk about. And it's more not so much like the company, but it's more like teams that talk about it. So if you're going to talk to digital teams at financial services, they will still very much sell you the cost benefit, which is an interesting perspective. But if you're talking with the business side or financial services companies, they don't.
Can I ask you a question on that?
Yeah.
Do they just talk about it, or are they deploying billions of dollars in float on new systems?
On new systems?
Yeah.
So I think, and that's the other point they were talking about, which is also the big change was that for a long time, financial services, they were doing pilots and POCs. And they have now built the business case, which is much better to sell internally. Because this is the other thing, is that most of the innovation that is happening within this space in financial services is still being done by small teams. Let's be realistic. And those teams then have to sell it internally. So they now have really tested and then a lot of POCs, and they have built a stronger business case than they had initially. I do wonder if the cost benefit is still really a business case that some companies find. So if you go and speak with the business side of financial services and you talk to them about cost savings benefits, if they're not paying for those cost savings benefits, then they don't care. So it's an interesting perspective we talk about, which is like, what is the real use case of this technology within financial services? For sure, you're mentioning, and that's typically two of the main use case or business case that we think about in financial services for transformation, not just blockchain, which is cost reduction or new revenue streams. So it's interesting that you talk about that, but I definitely agree that we have now moved into a space where the business case is much more clear. I think you mentioned BlackRock really helped change a lot of that conversation. But we still have business case and use case that we have for a long time, for example, around the tokenization of RWAs, which is still very interesting, and there is still a lot. I mean, there were so many bonds tokenized recently. I started counting at one point, but there is still a lack of interoperability. There is still a lack of really secondary markets. So while we still have some business case, and BlackRock is a really interesting case, I do wonder if we have arrived to a place in which really we are really transforming financial services. I think we're still a bit further away than where we want to. So we're still in between the horses and the cow.
It's very dangerous.
Yeah, I want to go a bit more into the real asset topic, actually. Maybe Wasim, you can add to that and dive in there, because we're seeing this trend of crypto and Web3 space really taking over some of these existing business models with a brand new approach that actually is a lot faster, a lot cheaper, a lot better in a lot of ways. And you'll see the ability to tokenize real estate, for example, as one of those massive ways. So maybe Wasim, you want to comment on that?
Sure. So RWAs, real world assets, like behind that little acronym, there is just this profound universe of opportunity. And it's very interesting that I think it's one of the killer use cases of crypto and blockchain, particularly with the real estate market. Real estate market, I know what it's like in the US. I presume it's maybe similar, highly regulated, right? And real estate entities, whether they're developers, have jumped on this idea that you can now fund the construction of a building, tokenize it, and then sell the assets and have them increase in value, be able to do things that you couldn't do before. And so this has been going on for several years. This has been the kind of the slow but steady march to the blockchainization of something that is real and tangible to both institutions as well as investors. And I think this is just such an essential key element that, yes, there's a lot of ideas in crypto, blockchain, cryptography, but when it touches existing systems, existing compliance regimes, existing processes, that's where you can actually make a lot of progress. And so I think this year and kind of as we move forward, real world assets and real estate, sure, that's been an emerging area, but there is huge opportunity to expand that from real estate to other things. And so now we start to see not just art and luxury items, but things like physical infrastructure. So the availability of Wi-Fi or storage being tokenized and being made available. And then more recently, a lot of attention, I think, this year on things like decentralized science. So the ability to tokenize scientific research. I mean, obviously it's the crypto world, so a lot of this research is on longevity, patents, those kinds of things. And I think that now with that sort of that precedence of you can take things that exist in the real world and bring them onto the blockchain, bring them on chain, program them through smart contracts, and give institutions a way to make money, give investors a way to make money. There are a lot of things that we haven't really thought of that we'll be able to do. As a musician or an artist, being able to tokenize not just the song that you did or the movie that you made, but your career or your body of work for several years, it starts to bring in a whole set of kind of interesting ideas and interesting ways to make the blockchain more liquid. Do you want to disagree?
I mean, I disagree completely. Okay, I don't mean to just be the troll on the panel. I want to be the troll on all the panels at the same time. It's a tough audience. Still a tough audience. Okay. Has anyone invested in any meme coins ever? What's a meme coin that you've invested in that other people might know?
Say Goat.
Goat? People know Goat?
Yeah.
Okay, people know the 4chan. Great. Okay. First time I said that in person. Okay. Would you rather, invest in Goat at 10 million pounds FDB, or would you rather invest in a yet to be constructed 10-year real estate project in Birmingham?
Why can't I hate on Birmingham?
I don't know. I was gonna go with the real project is like a hotel in Vietnam and stuff like that. The point is, I spent like 2 years trying to sell tokenization of real estate and bonds and so on to big banks. And the problem is nobody cares. Nobody wants to own that asset. Because when you take the RWA asset, you bring it on chain, what you see is there's a tiny little bit of private credit that people buy. There's a big fat amount of treasuries that they buy that they want to be risk off. And then they have the other side of the barbell, which is tokenized 4chan from 2002. I really want there to be a world where let's say, high quality, useful assets are things that are on chain and people own. But I do feel like there's a long path there. And Robbie, I'm curious to your view in terms of what are the kinds of assets that the users of Animoca properties actually are interested in.
So I think we spend a lot of time in entertainment, as many people might know. So I think the majority of our focus, not exclusively, but the vast majority has been on digital goods, because we really think of blockchain as a technology that enables the creation of digital goods that you can truly own for the first time, because it's great at managing copyrights and royalty distribution and things like that. And so we focused on gaming, we focused on art, on all kinds of intellectual property, because we've had very poor copyright protection for digital goods previously. And once you can start to give those digital goods value through uniqueness and through verification and ownership, then lots of other exciting businesses can be built on top of that. So our goal is first and foremost to get people comfortable with the idea that digital stuff has intellectual property value. And so we started, of course, in gaming because we felt like gaming audiences get that, because gamers have bought virtual stuff for years and have this idea that, you know, this sword or this race car or whatever it is has value to me because it has utility in this game. And then, you know, there's a Venn diagram of that, and collectors of things like baseball cards or, you know, merchandise and stuff. And those things have value to me because of rarity. And we see rarity also occurring in digital scarcity in games. And so tokenization is kind of a natural flywheel for all of that stuff. So I think we see a lot of traction and a lot of pickup in gaming. I'm really pleased this year that we finally see breakout in gaming distribution when it comes to the TON ecosystem, because now we actually have a distribution platform that allows us to access users at scale, whereas we're largely, you know, kind of not really welcome in the Google Play Store or the Apple Store or Steam or, you know, game consoles or anywhere games pretty much have been distributed previously. And so TON has really helped sort of vault us into the kind of user numbers that we're used to in Web 2, where now we can think of, oh, well, my product can have 20 million downloads, 30 million downloads, and that's something that's now normal, thanks to stuff we've seen in the second half of this year, so it's quite exciting.
And I want to hit on that a little bit further as to how do you get some of these bigger game publishers and bigger brands to start to integrate this technology, because you mentioned TON, you know, I do think that they have, quite a lot of downloads, quite a lot of people doing things. So I think a lot of it is still kind of engagement farming, a lot of it's still kind of the tap, click to earn, or things that are very simple. So how do you get some of the bigger, more advanced games and studios to build more of these things?
Sure. So I think there's two parts to that question. The first part is I think we have to think about what the strategy of using simple casual games is. And I think you know, the strategy of TON, which is public, is that they're trying to use a very casual, broad platform as a way to build a user acquisition funnel, so to build a top of funnel to bring people down into more sophisticated services, specifically DeFi in their case, because they figure if you can go and build a game that has 50 million users at the top of the funnel, maybe you'll find 50,000 users who will be high-value DeFi customers by the time they filter down through your application stack. I think, you know, in terms of what kind of game content and game studios, I think it's a fallacy, actually, to look to historically successful game studios as a kind of a marker of what's going on in Web3 gaming, because Web3 gaming is a new platform in the same way that mobile was once a new platform, that PC was a new platform, you know, Nintendo Switch, these are all new platforms. And every time new platforms come along, there may be some carryover of IP, because we all love Mario, we all love Garfield, etc. But the game companies that succeed on new platforms are always platform native. Always, always, always. You know, you don't think of EA and Ubisoft as the great mobile game companies. You think of Supercell and King with Candy Crush, because those were people who understood the medium. Rovio, right? Angry Birds is what got a lot of people on to buy a smartphone originally. And I think the same thing goes with Web3. where we see how many millions of people in the Philippines were onboarded to Web3 as a result of a handful of games running on Ronin, specifically Axie Infinity and Pixels, right? And that's amazing because there was a use case. They're like, oh, we can play this game and we can make a little money. It's fun. All our friends are doing it. Awesome.
Yeah, love that. Yeah, it's super interesting because, yeah, you have to understand the space to really build a product that people can get, but also it's simple, it's easy, and you can interact with the blockchain without knowing you're interacting with blockchain, right? You're coming on chain without going through all the hoops. And Telegram is an example of something that makes it super easy to just get started. You know, click to make a wallet, for example.
Although there is a little rub there, I find, at least in my experience, because one of the challenges of making it so easy that you don't know you're using the blockchain is then you won't appreciate it. You have to know you're using it because otherwise you won't feel a difference between the Web 2 experience and the Web 3. So it won't really occur to you that you own it, right? If you had to figure out how to buy punk 6-7 years ago, you earned that because it took like 40 clicks and failed transactions, etc. So you really felt a sense of ownership because you worked for it, right? And that's part of why we have such a dedicated, hardcore, like degen audience in crypto, because everybody went through those trials, right? So I think we have to figure out how we onboard people simply, but also keep reminding them that yes, this is actually different, right? There's value here.
Super interesting. I haven't actually heard that take before, but yeah, it's important to make sure that people value the blockchain and what they're using. So yeah, that's great. I'd be remiss if I don't touch on the topic of AI, obviously, because it's taking a lot of mind share these days. And it goes to question, will AI interact with the blockchain a lot? And is crypto needed for AI, and is AI needed for crypto? Open question to the audience. How are we feeling about it? To the panel audience. We'll get to you guys soon. After this question, I think we'll wrap it up a little bit. But yeah, let's start with AI first.
If you really simplify what AI does and kind of stay away from the science fiction going to Mars things, you know, it is at least improved labor productivity. And the improved labor productivity is very asymmetric. So some people will really benefit and grow, and others will have issues in their careers, and those are profound. But the productivity increase is all digital. It's all digital goods and services. And Web3 is a digitally native infrastructure for economics of the type of stuff that AI makes, whether it's images or text or objects or videos or whatever. And we don't have any other architecture for owning and permissioning and transacting in these digital goods and services. It doesn't exist. You know, paying a subscription to OpenAI, that's not economic architecture, right? Which is ownership, transactions, transferability, digital scarcity, all of these things Web3 is perfect for. And so at the core of our investment thesis is this hope that Web3 as an open network, as a global network that's not limited to any particular jurisdiction, will be the place where all this stuff settles in a financial sense. And I think when we look at the crypto AI world, we separate projects into two broad categories because I like to make things black and white. The world is simple. And there are smaller categories, but there's kind of two large categories. The first category is AIs are really cool. We're crypto people. We're going to make our own AI, and it's going to be crypto AI, and it'll be cooler because crypto's cool. You know, and I like Forecaster. I have friends on there, you know. But we keep making this mistake in crypto being like social. Social's like, wouldn't it be cool if we had social but crypto? You know, and I think in the early gaming part, in the early development of gaming and crypto is the same problem. You know, where it's like, let's do games but with crypto in it, because we haven't yet developed the kind of the native form factor for it. And I think it is a kind of a repeating failure mode, at least in the early years. But there's a lot of AI stuff that's along the value chain of the AI industry, whether it's data or model training or GPU provision, you know, or labeling or blah, 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 whatever. That's been just cloned and recreated with decentralization as a decorative element of what that service does. And then there's the second category, which I think is more profound, and that is using Web3 for what it's meant to do, which is to be the economic architecture and the financial infrastructure for artificial intelligence. So to the extent that we do have, you know, AIs transacting and making things, and they need to be owned, they need to be restricted from control of corporations who might abuse their data in some way. I do think that Web3 will come to be that financial infrastructure in a way that's far more modern and far more appropriate. So that is my long answer because I haven't been able to be brief.
So on the way to Mars, I think there is a more colorful path, maybe not one that's there now, but you know, I don't think Apple released their update today, but you know, it's not going to do any of this. But I want my AI stuff to actually do stuff, perhaps in the real world. And to do that, they're going to need suitcases of money. I'm sorry, they're not going to be able to use suitcases of money, so they're going to have to use crypto. So I think there is this inexorable link between what AIs, not chatbots necessarily, but agents, AI agents will need to accomplish, and the controls and the mechanism, the economic infrastructure that you described needs to be able to do. And that's not coming from any traditional world. That's going to have to come from this new financial system that's based on blockchain. So I think it's very exciting.
I think I might add two things also to particularly what you were talking about, Lex. Specifically the trust layer. So I think Web3 is going to provide a lot of the trust layer to AI that allows us to sort of delve in and audit where we decide we need to audit how AI arrived at a decision, or where you put all that logic and just sort of inscribe it on a blockchain, never to be looked at again unless you need to, because some shit has gone wrong, basically. And the other place I think is going back to the onboarding discussion, because I actually think that when we think about how we're going to solve our UI and UX problem in crypto, I think actually AI is going to do that for us much faster, where we won't have to figure out what the interface is, because it's just going to be a chatbot, and it's going to be like, I have these tokens, I want those tokens, go get them, right? And that's it. And we won't have to figure out bridging and wrapping and whatever it is. And is it on BSC or is it not, you know? And so I think that part, hopefully in the next, even call it 6 months, we may see some, you know, good examples of that from a usability standpoint.
Very exciting. Anything else to add, Rita?
Yeah, I mean, like I'm probably from like the traditional side, so I'll probably go more with the Lex. I think these are just, for me, they're building blocks, really. So the Web3 from the traditional financial services, Web3 will be your infrastructure, and then AI is just going to build the block. One of the key things AI can do within traditional regulated financial services, because within traditional regulated financial services, what you were describing, what you were describing, it's at least not for now permitted, right? So this is, I think, much more within the DeFi space, which is very interesting. But within the regulated parts, AI is going to be one of the key use cases, really just analytics, and it's really looking forward into your past data, and then really helping with looking forward and giving some much more insights. And that's just going to be a building block on top of the use case that you have running on Web3 infrastructure.
Yeah, sums it up very well. I really appreciate that. Now is to kind of wrap things up. Okay. Yeah. Any final predictions or final things we need to overcome or look forward to, or advice for the audience as we look forward into 2025? What do you guys want to wrap up with?
I'm going to key off what Robbie said. The usability and user experience of apps in the crypto space is just truly horrible right now. And we're talking 2024, and they were worse a few years ago. So yes, we've been through some battles, we have some scars, and that's great for the communities that are formed around that. But as someone very interested in seeing a lot more investors buying cryptocurrency, we need to lower the barriers, lower the friction, and that means that developers need to build smoother, friendlier applications. And I think your vision there of AI helping with that is huge. I can't wait.
Entrepreneurship is a combination of curiosity and resilience. So in 6 months, when half of this room loses 80% of their money, don't despair.
Not financial advice.
Don't despair. Journal, feel your emotions, and remember that it's important to not give up. So that resilience is what eventually what gets you up the mountain. So I think there's probably a couple of people here who've had a few round trips through the crypto cycles, and so just don't lose yourself. It's an exciting time in the market, and I think as long as you remain curious, there's a fantastic amount of stuff to learn and build.
So I'm going to try and on to a more positive note.
It's an inspirational quote.
Done this time. So, what was I going to say? I think actually the next year, 2025, should at least start in a really positive note. I think what we have seen, the regulation, the US elections, and everything that's happening is really changing, and it's much more positive. So as you build, I think like the main thing is thinking about where you talk about in the beginning, what's the business case? Actually, what is it really that you're trying to build? Sometimes when you're innovating and when you're coming from a different angle, you get very excited about something really interesting that it's very cool, it's very interesting, but do you really have a use case? Are you really solving a problem for your user, for your customer? And that for me is the key thing to really unlock some of the opportunities. And that will really help you ride and really find a customer that will be obsessed with your product that you're building. And even if it's not perfect, even if it's difficult to use, they're really gonna go into your journey with you.
So I think also to end things on a positive note, I'm not picking any notes. I do think the market conditions are, we couldn't ask for better conditions at the moment, and I think that probably bodes well for hopefully all of next year, if not further. But I think what that does is also it makes everybody's life a little bit easier when you're taking a risk and trying something new. And so if there's any time to try it, this would be a good time to try it. You're going to get a much more favorable year from potential investors. You're going to have a much easier time recruiting people who may have been skeptical about the space before, because all the sort of macroeconomic indicators are in our favor for the moment, so we should take advantage of this. And I also, have to give a shout out to a sector that we've been involved with and associated for a while, which is NFTs. And I think it's one of those cases where if you look at how resilient communities of PFP projects have been over the last 4 and 5 years, it just goes to show that there is actually a thing such as digital culture. And there are online communities that have both financial bonds as well as cultural bonds, social bonds, etc. And we're beginning to see that actually reflected in floor price, our favorite metric, right? But I do think it's a great example of the narratives change. But if you really believe in a thesis and you think that it has value, it will come back around eventually. You just have to be able to, stay in the space and survive long enough for that to happen. And that was actually supposed to be a positive note.
Definitely a lot of resilience. That's very positive. I don't think I've seen an audience sit on their seats for so long, so patiently focused and waiting to get their next beer. So really appreciate that. I want to open it up to potentially one question. Yeah. So great.
Okay.
I think they do want ears, so we might not want to hold back for too long.
Question?
But any questions from the audience before we wrap up?
No one has any questions.
They seem to want their ears. Maybe. Okay, one question.
That's fun.
Okay.
Hi guys, it's a question for Alex. I do agree with you on the idea of like not adding crypto to every single application in the world, specifically social and these ones. And you mentioned that you're focusing on DePIN, and I was curious as to which industries outside of crypto do you think are most going to benefit from DePIN in terms of the ones that are primed for crypto to sort of enter?
Yeah. So adding crypto to stuff is like adding capital markets to it, right? So DePIN is like IoT with capital markets, or NFTs are art with capital markets. And sometimes that works because that unlocks a whole new design space. With DePIN, so we made an investment in Peak, which is layer one for many DePINs dedicated to them. And you know, I think there's intuitively sort of this idea of like you have a blockchain for robots, all sorts of robots instead of a blockchain for people. And you have a machine economy on it, lots of, you know. So I think it's a really interesting experiment. The things that DePINs have done is, on the economic side, you know, when you're deploying a network, and I'm sure you know this, but just for the audience, like when you're deploying a network or you're deploying some sort of IoT project, right? Like you're a city and you want the digital twin of your city. There's a huge upfront cost, hundreds of millions of dollars or $50 million to actually build the sensors, deploy the sensors, connect them, maintain them, you know, and so on. And what crypto has done is it has used sort of like this ICO mechanic or like the tokenization mechanic, and then yield farming and rewards to get people to bootstrap a network with literally no cost using, you know, money that has been hallucinated into place, which is what equity is, which is what fiat is, and so on. And so it's an amazing coordination mechanism to bootstrap networks from networks otherwise would not be built because the actors that would invest that fixed cost don't find it attractive. So that's really, so I guess we're bullish on a horizontal bet. When looking directly at particular verticals in DePIN, it becomes a lot more difficult. And you sort of get into this place of like picking hits in the same way that's really like, yeah, crypto gaming, cool, but which one is a really different skill set. So I think for us, it's more thematic and horizontal around it. And then outside of that, you can also, you know, like in 2018, 19, there were all these finance people like me coming into the space being like, oh, it's going to be amazing. We're going to totally tokenize all the things. And now you've got telecom people, like people who lay the hardware and build the robots are going through that same kind of like LSD trip and launching all these tokens. And it's a really interesting space. And so I think it's going to be a marriage of real productive assets in the physical world doing stuff and bootstrapping these networks. And the next phase is trying to commercialize them. That's where the big question mark is. But at the same time, you know, that's the work that we're here to do.
Well, thanks.
Hi, thank you. So there's an interesting panel. There's a lot of contradictions, of course. On one hand, when it comes to mainstream adoption, you talk about being able to see you're using blockchain, which is adding value rather than not seeing it. On the other hand, you're talking about it's about the UX and it's about being able to seamlessly use or transact with blockchain. On the other hand, you're talking about not needing to know that blockchain is in effect underpinnings a transaction or an activity or something you're doing. So when you talk about mainstream adoption, which I think is going to be required in order to get away from this being something that takes place within small rooms, effectively, although I'm not going to undermine the grouping here, what is going to be the single biggest factor in mainstream adoption? I'd be interested in your perspective on what you think is going to be the big thing in transitions from where we are to mainstream.
I don't think it's going to be one single thing. I think that's the problem, looking for one single thing. It's going to be regulations that make things clear so that companies can build stuff and get it out. It's going to be big tech companies getting out of the way so that developer products can be distributed to the people who want them. It's going to be the usability so that ordinary, everyday people who aren't in this room can actually use applications, whether they know that they're using blockchain or not. And it's all of the wonderful use cases that haven't even been invented yet that need to get in front of these everyday people. I think, you know, it's not one thing, it's a whole bunch of things.
So I agree. I think it depends a lot on which use case, which country, and which area we're talking about. So before this panel, there was the keynote around stablecoins. We can argue that stablecoins in Argentina, for example, that have achieved mainstream adoption. Everyone in Argentina uses stablecoin as a stable store of value because that local currency, it has so much inflation that you basically go to the shop and buy some milk and it changes 2 to 3 times a day. And so they use stablecoin as a store of value. So we could potentially argue that in Argentina, in emerging markets, stablecoins is already mainstream. If we look into the UK in the financial services, stablecoins, we don't really have the same problem. And so for us, the use case in the mainstream might be something different. Bitcoin, if we think about people, retail clients using or holding Bitcoin, we could also say that's actually already mainstream because think about any other asset class in which you have so many retail people actually holding it and making money from it. So I think the use cases, they're really different. And when we talk about mainstream, I think that's why it's, for me, within financial services, I really do not care that my clients or that the retailers' clients, they know it's blockchain because it's infrastructure, it's in the background. The same way when you go to the bank, you don't know if your bank is operating on the cloud or if it's operating on the prem. You shouldn't really care about it. But I know that's the point that Robin was saying is that in gaming or in other ones, then you have that community sense, and in that case, then it does matter. And that's why it's also so hard to explain because there is so many different angles and there is so many different factors that really change the conversation and really change what we're thinking.
I think also one thing to think about is what we mean by mainstream and how we judge our own success. You know, do we judge it on an individual company basis? Because, you know, if I owned Tether, I'd be quite pleased, even with only 100 million customers, right? Because they're doing quite well. And I think that we have to think about whether we're measuring success in financial metrics or we're measuring it in number of users or ubiquity or geographic distribution, because there's all kinds of hugely successful businesses and industries that actually only operate in one country or one area or one product, etc. So I think we have to be fair on ourselves in where we set that bar. When I think about like gaming, where we spend a lot of time, when we look at the power of distribution that Telegram has given us, we start to look at user numbers that we're more familiar with coming from a Web 2 background. So to us, that feels mainstream. But if I came from console, I'd be happy with, you know, an order of magnitude smaller, because actually before mobile came along, console success was measured in hundreds of thousands of users because it was a high margin product and it was very different. So I think we just have to think about how we kind of decide where we set the bar for mainstream.
Cool. So we've already hit it in a few ways, it sounds like. Well, it's definitely very optimistic. I want to leave it on a high note, so really want to thank our panelists here. Everyone, please give it up. Thank you so much for staying here. All right, thank you so much. I'll give it back to Caitlin. And then also want to mention, check out keep in mind the stablecoins report from Onchain is launching on Thursday. And then our Web3 predictions report for 2025 will launch to start the new year in January. So we're super excited for that. But thank you so much again for joining. Let's give another round of applause and give it back to everyone.
Great, guys. Thank you so much. Thank you, guys. Guys, we've got the space for another hour, so please help yourself to drinks. There's cupcakes, anything else. Thank you again. We're doing photos. Guys. We're doing photo. Yeah.
Yes. Good number.
Nice. Thanks, guys.
Awesome. Cool. Do we want to say the pub as well? Or
I'll just do like, well, you can
Yeah. understood?
My club founders, son.
We're gonna do team photo real quick.
Yes.